Welcome back to the Stock Estate, everyone. Oof, the market these days have been pretty disgusting, okay? It has been like a moody brat, okay? It's trading upwards, sideways, downways, moving up intraday 5%, 6%, okay? It's taken us for a wild, wild ride. But do you know who's moody than that? Those hedge funds, bro. Those hedge funds, okay? I think those hedge funds are even more moodier than that. And they're probably sweating their buttholes out right now after this entire GameStop and entire saga down with all those AMC, all those stocks, and Robinhood. But, okay, while it's fun to watch, from the sidelines, enjoy all this saga that's going on, we must not forget our main job. And what's the main job, everyone? That main job is to make money, and to make money while managing our risk. And today, this video, okay, we are going to talk about the top 3 swing trade stocks that we're going to look for the coming week of February, the first week of February. And these 3 companies will be centered around breaking out, and it will be one of my favorite plays, which is wedges. Okay, and I'm going to introduce you 3 of these plays, which my old subscribers, or if you watch my previous videos, you'll be quite intrigued and quite familiar with some of these names. But wedge plays are always very fun because you can play them again and again and again because they can break out and you sell them. When they reverse back down again into the wedge, it becomes a wedge again. You can play the breakout once more. Before I jump into the video, I just want to emphasize that this channel is a team-based effort. Okay, we are a community. Okay, my job here. Okay, I'm here to research, to give you one of my best picks ever, and your job, your job is to segment it, and tell me your ideas, your thoughts in the comments below. What is your favorite one? Okay, out of the 3 stocks, what is the favorite one, and which one are you going to play for the coming week, and why? I want to hear why are you choosing it. Okay, give me some solid stuff, okay, so that I can learn from you as well. And while you're at it, pay your taxes, guys, on this channel. On this channel, we pay by clicking the like button, okay, and smash the like button and subscribe to this channel for more educational videos, and as well as my weekly top 3 stocks swing trade videos. Alright, okay, for the last top 3 stocks video, I actually made an update video on those specifically, which is Workhorse and Blink. Right after I called it out, it popped 30 to 35%, and congratulations to all of those who have taken their profits, and ride the wave up. And as many of you know, after I made that video, Workhorse continued to run up massively until 30 at the high of $38 before closing back down to around $34. Okay, and those who have the balls to hold on and set their trailing stop losses, congratulations on your 50% up, okay? Even I'm jealous because I exited most of my positions when it was around $32, okay? So congratulations on those. And after that, I made an update video about what are the stocks I'm looking at, and one of the plays which was an earnings play, which is American Airlines, okay? And American Airlines, I called it out when it was $15, okay? It was $15, okay? And around here, okay, it was an intraday low of $15, and next day, before earnings, it actually popped up massively until before hours was around 66% actually. Massive pop. If you go watch CNBC on the news, right, it was there. But unfortunately, very unfortunate, okay, they apparently is one of the shorted stocks, and it squeezed up so high that with all the saga about GameStop and everything, okay, they decided to restrict trading on American Airlines, and they stopped people from buying it. And hence, when market opened, it only opened up around 23%. And for me, I sold right away because I knew that after this entire saga that's down there, a lot of restrictions that is there, I did not want to risk my profits being taken away, so I took my profit. But overall, it was still a very, very good trade nonetheless. Okay, it was up 20%, 25% profit for people who got in at a good price. And it was a 1-2 day trade, so it's a pretty good trade actually. And for Tattooed Chef, right? Tattooed Chef, as I said, Tattooed Chef is one of the trades that I'm looking at, and I was very, very bullish on this company and its fundamentals, so it's a stock that I don't mind holding for at least 2 to 3 years. And hence, its prices right now, I bought in at $23.60, okay, it's been riding down all the way around here, down a little bit, up a little bit, down a little bit, okay, I can see it consolidating over here before breaking up to its massive upside. So for me, I'm still accumulating shares, okay? This is a more patient play, and it's more of a safety play, so no worries about that. Tattooed Chef, I'm still holding strong. RKT, another one of my favorite plays, okay? I bet you, rocket companies with its 95% insider ownership, okay, and the management team is awesome. The way they do things are awesome, okay? They have huge sales growth, but they're reinvesting all their sales growth and their sales, right, and their top line revenue into advertising and to improving their bottom line and their top line. So very, very bullish things ahead for this company. I expect its earnings to be destroyed in its earnings. So it's more of a longer term play for me. Rocket Companies is actually in my long term portfolio. I'll make a video about it next time. But yes, Rocket Companies, I'm still holding strong. Although I'm down a little bit from where I bought it the second time, but I'm overall still up. But I'm holding it long term. Okay, and yeah, that's it for the update on previous video. Now let's look at the top 3 stocks of this week. Okay, first one. Corsair Gaming, okay, Corsair Gaming, okay, look at this, beautiful wedge once more again, okay. I'm pretty sure those of you who have watched my previous videos, you roughly know what I'm talking about, okay. Beautiful, beautiful wedge right here. And for those who are new here, let's take a look at what Corsair Gaming is. Corsair Gaming, it is along with its subsidiaries, it designs, markets, and distributes gaming and streaming peripherals, okay, components, as well as gaming systems in many different parts of the world. Okay, and they offer gamer and creator peripherals such as gaming keyboards, mice, headsets, controllers. So they sell a lot of stuff related to gaming. I mean, it's called Corsair Gaming, right? So basically, okay, last time I called it out, okay, it actually closed up very strongly, very strongly, all the way up here, okay, to an intraday high of $49, where most of us took profits. Okay, and I hope you take profits, or at least your trailing stop loss will have stopped you out around this area, around the $46 line over here. Okay, it would have. Okay, and you take the profits, and recently has reversed back down into this 50 moving average over here. Okay, this 50 moving average, where's it? Okay, let me take a look. Let me check out my doodle. Okay, 50 moving average over here. Now it's back at an area of value. Wow. Okay, since it's back at its area of value, right? What can we look to do? Yes, buy back in. Okay, as I said, you can see that there's a very nice wedge that's forming again. Okay, and if you are buying at the lows of the wedge, right, huge potential for an upside. Okay, and you can set the stop loss below the previous swing low, okay, which is around $34. Okay, and if you can take a look at this, right, below $34, yes, and there's a very huge upside there is. Okay, the risk is around here. This is the risk. This is the risk. No. Okay, and massive potential back up to the further upside from $38 all the way up, back up to its all-time highs again. Okay, set your trailing stop losses. Okay, and this is again a very nice play for us to get into. And with this stock being highly shorted as well, with the GameStop saga, this stock's over 20% shorted. So again, huge chance for a squeeze. Right now the shorts are still pushing it down, but high chance for a squeeze upwards. Okay, next one I'm going to talk about, okay, it's going to be a quick one. Okay, next one I'm going to talk about is Dada. Okay, Dada Nexus Limited. Okay, what is Dada? Okay, this is the chart that you're looking at right now. This is the chart, but let's look at what they actually do. Okay, they are a China-based company, and they are an e-commerce company. They operate is a platform of local online retail and delivery in China. Okay, so maybe they are like semi-Grab, semi-Amazon of China. Okay, they are a smaller company, a $10 billion market cap. Okay, and they operate JD, and local on-demand retail platform for consumers, retailers, and brand owners. Okay, and Dada now is a local on-demand delivery platform for merchants and individual sellers in various industries. So they're like they deliver stuff for people. They are businesses. Okay, and they deliver goods from place to place. It's kind of like Grab, but for businesses. So it's pretty interesting. Okay, and this company is actually founded in 2014 and is headquartered in Shanghai, China. Okay, and this company has massive growth. Okay, and you can see that currently it's not profitable yet, not really profitable yet. But if you take a look at this, right, okay, it's pretty right now. Okay, they have negative profit margins. Okay, because they're still building. But however, what I really like to see was their quarterly revenue growth growing at 85% year over year. Okay, that's massive. Okay, there's a lot of growth that's coming over here. And in China, okay, once if they can grow to a Grab equivalent of China, insane. Okay, insane. That will be crazy. Okay, they'll have massive profits that's coming in. So fundamentally wise, I'm really liking this company. But however, there's definitely risk involved in this because there are still negative profit margins. But again, this is a swing trade, so we are going to look at the charts a little bit more closely. Okay, I called it out this a few days ago. Okay, around here, let's see. Okay, it was one of my favorite, one of my top 3 stocks video. Okay, I called it out around here, and since then, okay, I caught this wedge around here, right? But it hasn't been really doing anything. Okay, it's just been going upwards, sideways, trading sideways. So as again, wedges, you have to be very patient. Okay, because it takes time, because you never know when it breaks out. But when it breaks out, right, a massive potential for the upside, massive potential. I repeat, massive potential. Okay, so you can see it can go all the way back to its all-time highs to around 60. Okay, that's insane. Okay, $60 is its all-time highs, and right now, right, what you can see is it has a very nice consolidation pattern around here. Okay, you can see that it's consolidating and it's very strictly again respecting this 50 moving average over here. Okay, every time it comes over here, it bounces, and there's a very strong support, as I can see. Okay, a very strong support around here. Okay, you can see it's supporting this area very strong. Every time it hits here, it bounces. Every time it hits here, it bounces. Okay, this area is around $41 as well. And right now, guess where it's trading at? $41. Okay, and $41 is almost at the limit. And I think I actually bought in around $43, $44, so I'm down a little bit. But this kind of, you have to hold through the large swings to get the large profit. And again, I will be adding down more positions on this again. And again, if you want to start getting to this now, okay, you can just set the stop loss. Okay, if you're a more conservative investor, set a stop loss at $35. Okay, $35 all around here, which is around the next swing low, $34. Okay, I know it's a little bit steep, but okay, there's a mistake that I learned, from the previous one. I got stopped out for a few trades like NLS. Okay, and I might be getting to NLS again, but I'm waiting to see how. But recently, I've been getting stopped out a few wedges play that I have because of these large swings in the market these days. Because the market just being such a moody kid, just been swinging up and down, and I've been stopped out quite a few times, and honestly it's a little annoying. So give a little bit more room for this volatile market to breathe. Okay, because these days I can tell you is from my experience, okay, most of the time you'll be a moody guy. You'll just close back down very deep, right? Then you'll just close back up as swiftly as possible, and you don't want to be stopped out here, and after you cry because you didn't get this profit upwards. Okay, so that's not what we want to do. Okay, yeah, so basically that's it for Dada again. And now we're going to look at the last stock, okay, is Switchback Corporation, which is SBE. SBE is a merger with ChargePoint. It's a SPAC which hasn't been merged with ChargePoint yet, and ChargePoint is a charging station for electric vehicles. And the hype with electric vehicles and their charging stations, anything that's related to the clean energy sector, massive. Okay, it has been running up massive since November. Okay, massive all the way now to all-time highs of $49. Okay, and that's really a lot of upside. Okay, it really ran a lot. Okay, and recently it has been cooling down. Okay, it's been relaxing. Okay, and for the longest time ever, okay, you can see that it has been trading away from the 50 moving average for so long. Okay, insanely long. Okay, they have been trading away from the 50 moving average for so long, but recently it started to contract. Okay, trading up and down the 20 moving average, which is a good sign when you want to play the wedge, because you want to see it rebounding around the 20 moving average. Okay, and that's the 20 moving average is a nice point to set your guidelines. So anywhere below the 20 moving average is a buy. Anywhere above it, not so ideal, but you could add on your positions if you hadn't had a chance to build your positions yet. Okay, but what I want to see is you can see right this over here. Okay, let me bring out my doodle again. Okay, it is slowly closing up the 50 moving average, and I can see it consolidating over here, and there's this nice wedge pattern again. You can see this nice wedge pattern that is forming once again. Okay, and again, once it breaks out, okay, again, massive potential for the outside before the merger, or it could start dumping. Okay, so you must be very careful about this. Okay, I have to emphasize the risks of wedge plays, because you have to set a very strict stop loss, and the stop loss must be a limit where you are comfortable with losing that amount. Okay, again, we don't want massive losses. We want small losses, massive gains, so that the massive gains will offset the small losses, and in the end, we still win. Right? Okay, so right now, what I'm going to do with this now, again, I think you already know what I'm going to do. Okay, this kind of wedge plays, I always provide you the best wedge plays, right? And I'm pretty sure that you already know what to do, but this is for the benefit of my new viewers. Okay, stop loss below the previous swing low if you are a little bit more conservative, and trailing stop loss for massive upside. Okay, and the previous swing low is around here, around $34. Okay, right now it's at the $39. If you are really conservative, you can put the swing low over here. Okay, the previous swing low, you can count it as here. Okay, and put it for the massive upside. Okay, and honestly, okay, what I can see over here, what's this thingy that I'm using? This is called the 2 standard deviation Bollinger Band. Okay, and what does this mean? Okay, this is a quick tip. Okay, those of you who stayed with me to the video until now, right, this is a quick tip for you, because you can see most of the time, okay, this company, okay, the charts will trade within this 2 standard deviation Bollinger Band. Okay, when it trades out of it, very quickly it will reverse back down very heavily. So it will trade and respect this quite heavily, and you can see that once it touches around this area, right, if it breaks the Bollinger Band, most of the time it will reverse back up, or it will totally crash. So again, this is a very nice place to set your stop loss over here to gauge where the price action is actually going to move. So around $34 is actually pretty decent. $35 is if you want a tighter stop loss, okay, and trading stop loss for the further upside. And that's it for today's video, everyone. Okay, I hope you manage your risk well. Okay, this is a very, very volatile market, and I've been thinking of making some videos on rebalancing your portfolio as well as rebalancing some of your positions in this coming week. Okay, I know many of you are very, very afraid of a crash because with everything that's going overly overvalued right now, and more new investors are actually coming in to the markets. Okay, and yeah, that's a very, very concerning kind of thing, because will it push on this so-called bubble to be bigger, or will it crash magnificently? Okay, and what we can do is not to pull everything out of the markets, because that would be stupid to do so, because it can run for a few more years. But what we can do is to rebalance our portfolios regularly, okay? Have some good mix of value plays as well as growth plays, and set your stop losses in place so that you have liquidity. If it crashes, you get stopped out, you still have the liquidity to buy your long-term investments at great prices. And that's it for today's video, guys. Okay, don't forget to like the button, like the video, subscribe to the channel, and I shall see you in the next video. Stop and stay out.